I was about to mention something earlier, which is the fact that some of us are trying to do some things that even God cannot even afford. That is being alone, right? You need to understand the fact that there is power in association and collaboration. Right? There is power in association and collaboration. So as much as you can, right, try to interact with people. You know, as long as you feel like, oh, this person in the group, I feel like I'm more inclined. I can be inclined with this person's thought process, with the way this person's chat is so clean. Oh, I love it. I mean, you can reach out, right? Hello, can it be, friends? Can it be buddies? All right. So that is just, you cannot do life alone now. And when it comes to trading, especially in the aspect of, in the face of trying to get things right, you just need to be around people, around the right people, right? So yeah, so tonight we're talking about skill levels. All right, we are talking about Keylevels extensively tonight. Um, Keylevels are closing prices. All right, Keylevels are closing prices. That is, we have what we call anatomy of a candle. We have what we call anatomy of a candle. So let's start from here. All right, so we have what we call anatomy of a candle. So okay, let me change this. So all right, so say this is one candle right there. While this is another candle right there. All right, so let's also change this color to this. Then let us attach this to them. One, two, one, two. All right, so remember, I'm just trying to make everything as understandable as possible for everybody, so that at the end of the day, no one is left behind. All right. So at the end of the day, no one is left behind, right? So we have what we call anatomy of a candle. So right here, this is our candle, this is our candle, all right? So this is the body, the shaded aspect, the shaded portion is the body, while the these guys are the wicks, all right? This is the wick, this is also the wick, this is also your body, this is your wick, this is your wick, all right? So you need to understand the fact that I said key levels are closing prices. That is, this guy being a bullish candle, this guy colored green, it is a bullish candle. So it means it opens by this area, by this down, and closes right here. All right, being a bullish candle, it means it opens right here and it closes right here. And this guy being a bearish candle means this one opens right here and closes right here. All right, so you need to understand the fact that this guy closes right here means this next candle opens from this point. All right, this next candle opens from the at the tip. All right, then it can keep dancing and dancing and dancing and dancing, dancing until it finally closes. Right, so it means this is also the closing price of this guy as well. All right, so that is what we mean by key levels. So key levels are closing prices. So what do we mean by key levels basically? Key levels are decision points. There are specific pricing levels where you want to see price either buy from or sell from. All right. Key levels are closing prices. There are decision points where you there are decision points, there are specific pricing levels, specific pricing areas where you want to see prices that either buy from or sell from. So it means at some specific pricing level, all right. So you want to expect buys or you want to expect sales from those levels, all right. There are decision points where you want to see price either buy from or sell from, depending on the market condition, all right, depending on the peculiarity. So we have types of key levels. We have the A-shaped key level, we have the V-shaped key level, and then we have the open close key levels. All right. We have the A-shaped key level. Let me start annotating right now. So we have the A-shaped key level right there. One thing you need to understand is the fact that even from naked, while from seeing it nakedly, right, while just glancing through it, you can easily tell that this is A-shaped. So that is the essence of, I mean, that is just the essence, trying to make it look simple in such a way that even a kid would be able to recognize the fact that, oh, I mean, this looks like letter A. All right, then we have V-shaped key level. This is what the V-shaped key level looks like. All right, just like a letter V, basically. All right, so we have the A-shaped key level, we have the V-shaped key level, all right, and then we have the open close key level. So the open close key levels are where two consecutive candles overlaps. All right, they are where two consecutive candles overlaps. That is the open and close of the candles, they overlap. All right, so this is your V-shaped key level, this is your A-shaped key level. All right, so for the open close key level, we have the bullish open close, and then we have the bearish open close. So right here is our bearish open close key level. Let me put this here. So right here is our bullish open close key level. I can't. Yeah, so bullish open close, which means just take this color as the bullish candle color. So it means this guy opened right and closed right here, while this one opened right and closed right here. So the midpoint, all right, that is where they overlap. So we can tell now that this becomes our open close key level now. All right, this becomes our open close key level, and lastly we have the bearish open close key level. All right, so we have the bearish open close key level. That is where the two downside candles overlaps. All right, that is two bearish candles. That is where they overlap. So you can tell that these candles, they are sell candles, right? This one opened right there, closes right there. All right, so while this one opens right and also closes right there. So we can now tell that this is now a bearish open close key levels. All right, this becomes our bearish open close key levels. All right, so what do we do around these key levels? So firstly, your A-shaped key level is where you want to sell from until proving otherwise. All right, so your A-shaped key level price comes into your A-shaped key level. So what do you want to do from there? You want to pay attention to selling opportunities until proving otherwise. All right, you want to pay attention to selling opportunities until proving otherwise. And whenever price gets into your V-shaped level, you also want to pay attention to buying opportunities until proving otherwise. You want to pay attention to buying opportunities until proving otherwise. All right. So your shape level is where you want to sell from until proving otherwise. So you guys should just pay attention to my choice of words. All right. This is where you want to sell from until proving otherwise. This is where you want to buy from until proving otherwise. And then we have the bullish open close key level. All right, so for your bullish open close key level, that is also where you want to pay attention to for buying opportunities until proving otherwise. All right, you want to pay attention to this guy for buying opportunities until proving otherwise. And then we have your bearish open close key level. So you want to pay attention to your bearish open close key level for selling opportunities until proving otherwise. All right, so you see we have key levels everywhere on the chart. When we go into the chart right now, you are going to see all of these things better. We have key levels everywhere. All right, so yeah, we have key levels everywhere, and then there are some things that that makes our key levels high probability, that in such a way that whenever you see this and you see this, you just know that based on one or two that you've been able to realize, based on one or two checklists, based on one or two criteria that you found, you just feel like you expect price to buy from here and not this one. All right, you just feel like you expect price to sell from here and not this one. So basically we have the bullish key levels are this one and this one. Your bearish key levels are this one and then this one. All right, so that is that as regard the basic level. All right, so let us just step it up a bit right now. Let us step it up a bit right now. So we said our A-shaped level is where we want to sell from until proven otherwise. So now let us pay attention to the phrase until proven otherwise. So what do I mean by until proven otherwise? Like I said, we are stepping it up a bit right now. So until proven otherwise simply means price disrespecting and violating your A-shaped level, that level you want to buy, you want to sell from. Price violating it with momentum. All right, price breaking above and price violating it with momentum. So basically, it means you want to sell from here, but price tells you that no, we are not selling, and then price ended up closing above your key level. So what does that mean? It means you wanted to sell, now price has taken you out. So you want to pay attention to something. What you want to pay attention to is that same A level that got violated should still be your key level of reference, should still be the level you still want to you still want to focus on. So it means from here, a lot of times, what price is going to do in this situation is price is going to, somehow engineer liquidity above, present for you inducement liquidity or whatever you want to call it, or your internal liquidity, and at the end of the day, tap into that A level that got violated, and then end up, buying from there. So what this tells you is that you need to make room for flexibility. All right. So in the situation where price takes out your A-shaped level, that's not the time to start forcing sales. All right. It's not the time to start forcing sales. You don't have to. All right. So you just need to make room for flexibility. In trading, you don't have to be rigid. If you are rigid, you are gonna get burnt, and you are gonna regret it. All right. So you are gonna get burnt. So you need to make room for flexibility. So your A-shaped level is where you want to sell from until proven otherwise. So now price has proven your A-shaped level otherwise. All right. Price has proven your A-shaped level otherwise. So what do you do from here now? The moment price has proven it otherwise, you just need to pay attention to that same level. All right. What price is going to do majority of the time, the price is going to come back into that level. But then paying attention to context around it is just to paying attention to liquidity around that key level. And at the end of the day, sometimes So sometimes it won't always be this picture perfect in such a way that there are times price will not even present for your internal liquidity, just come into this level directly and just buy off. All right. So that is you just need to find a way to position yourself. All right. And it's all about you just paying attention to your system. If your system tells you no internal liquidity, no entry, then just stick to it. All right. If your system tells you, I mean, you can enter even without seeing liquidity sometimes. All right. You can go with that too. So it's all about just paying attention to your system. So this is the first expectation. This is the first scenario of expectation whenever your shaped level gets violated. Then the second scenario is that way. I'm taking my time to explain this for this A level, right? So for this and this, we're just going to brush it up because we have discussed the extensive aspects with this guy. So the second expectation is whenever price closes below, it might not be the second candle, it might not be the next candle. It's possibly can just be any of the future candles. It can be the third, fourth, and all of those things. So the moment this happens, the moment this one closed above, so it means you can pay attention to buying opportunities. But then the next candle opens again and closes below that key level. So this means now you can pay attention to selling from that same level. All right, you can pay attention to selling from that same level. You can pay attention to selling from that same level. And it can even get so interesting in such a way that, this guy closed below, the next one would open again. I will show you guys examples, don't worry. The next one would open again and then, close above again. That means from here, what you want to do is just to pay attention to buying opportunities from here. All right, you remember something, you need to make room for flexibility. But I mean, coming across situations like this, it's more like prices ranging. Right, but then as much as price is ranging, your understanding of key levels can also be that could also be your go-to around this guy. All right, that can also be your go-to around this guy. So this is the second expectation. All right, the first expectation is that whenever price closes above, you want to pay attention to buying opportunities, and if at the end of the day the second or the next or the future candles ends up closing below, you want to pay attention to that one for selling. And then price can just keep flipping and playing around your key level like that. So from that point you just want to pay attention to buying from that level. All right, so now let us pay attention to the other examples. So now we have the V-shaped level. So we said our V-shaped key level is where we want to buy from. All right, until proven otherwise, and price ended up proving our guy otherwise, right? By closing below it by breaking it and closing momentum, right? So right here, we want to pay attention to what? Um, to selling from that V level. So this V level is our key level of reference. All right, this V level is our key level of reference. So we don't need to force any more buys. Any more buys the moment this has happened. All right, the moment this has happened, we don't need to force any more buys. All right, so this is the first expectation whenever your key level gets violated or gets proven otherwise. And then the second expectation is that whereby price would just possibly this one would close above. So from here you just want to pay attention to you just want to pay attention to buying from that same V level. All right, you want to pay attention to this one over, you are going to have V-shaped level, right? So it means you are paying attention to this one over this one. So in this case, we call this an A-shaped level that got disrespected. So as that is price disrespected to the upside and then to the downside, all right? While this one, we pay attention to this, we call it V-shaped level that got disrespected 2 times as well, to the downside and then to the upside. So some people tend to call it QM, left shoulder, and all of those names, but then the name isn't what matters. What matters is just you understanding the logic. All right, it's just about you understanding the logic. Names does not matter really. Doesn't really matter. All right, then we have our bearish open close level. So right here we said we want to pay attention to price possibly presenting for us liquidity below our open close level. All right, to sell. And then at the end of the day, we said this is where we want to sell from until proven otherwise. So now price ends up proving our key level otherwise by closing above it. All right, so from here this guy right here, right, this is a very beautiful confirmation entry. All right, you can use you can use this as a confirmation entry anytime, any day. All right, now what do you want to do? You want to pay attention to price coming back into this bearish open close that got violated. Then from here you want to buy. Right, so you want to pay attention to buying opportunities from here. So we are good. We would have other guys trying to buy from here. So you see, price possibly just triggered you here, right? So it means even you that you were trying to buy from here, you are not wrong. Sometimes price would just move from this one. I mean, 70% of the time, price would move from here and just run off. So it means you trying to wait right here, you are not wrong. All right, price just has other plans. All right, and then this is the first expectation whenever your guy gets proven otherwise. Then the second expectation is that whereby this guy gets price closes below it again. All right, so this tells us that this is still our key level of reference. Right, so it means we are still trying to pay attention to this one for selling opportunities. All right, over what? Over this one, and because of course we would have some sort of A-shaped level right here. We are paying attention to this first before this one. Of course, price can come here, but then what if price does not come here? So that's why we are paying attention to this before this. All right, that's why we are paying attention to this before this. That's why we are paying attention to this now in the case of where price closes above and all of that. So that's why we're paying attention to the closer one. Remember, SLK is you paying attention to. Remember, SLK is you paying attention to the to a liquidity resting close to a key level and then subjecting to structure. All right, so in this case now, this is our liquidity. This guy is our liquidity. This is the closest key level. That is this open close that was this bearish open close that has been disrespected couple of times. All right, so I'm paying attention to it over this one, and then all right, so and then we have this guy being our bullish open close key level. All right, so we said this is where we're gonna buy from until proven otherwise. So right here, price ended up proving that guy otherwise. So what do we want to do? So from here now we want to pay attention to selling opportunities from this guy, from this same guy, not this one. Now we're paying attention to this before this one. Remember, paying attention to a liquidity being this one, resting close to a key level, subjecting to structure. So possibly our overall structure might even tell us that we're in a bearish environment. All right. All right. So from here, I want to pay attention to selling opportunities. All right. So that's that. And then the second expectation comes whereby price is that where price, closes above this level again. So from here now, like I said, you are paying attention to this first. You are paying attention to this first before this one below, before the V that you are going to have below. So that is that. That's that. All right. So we need to understand the fact that key levels can be used to build bias. All right, key levels can be used to build bias. So when we are going to get there next week. Using we treated liquidity on Monday. We also mentioned that liquidity can be used to build bias. All right. So also, key levels can also be used to build bias. That is, you can understand direction by using key levels, and then key levels can also be used key levels can also be used to what was that word again now? Key levels can be used as key levels can be used for entries and exits. All right, clears can be used for entries and exits. So, for instance, in the case of now price has closed, price has closed above your bullish open close key level right there. So, one thing price can do right there is that price would buy from here and then target the next opposing key level. So, in this case right now, let's say we have this A-shaped level right there. So now this is our next opposing key level. So this justifies the fact that I've been able to make you guys understand the fact that price moves from one liquidity point to another. So now today I also want to make you understand the fact that price also moves from one key level to another. That is, you can see how price moved from this key level right here, and then this is the and then we targeted this one. So now it means we are using this guy as our entry, and then we are using this as our exit. All right. So it means you got your buy from here. So you want to target the opposing key level, the closest opposing key level, which is this A-shaped level right here. So your key levels can be used for entries and for exits. All right. Um. So I mentioned and I said key levels are everywhere. So there are things that makes your key level high probability. There are things that makes your key level high probability. So that is your key level. Um, so the first one is it has to be in alignment with structure. Number two, it has to break structure. All right. Number one, it has to be in alignment with structure. Number two, it has to break structure. Number three, it has to sweep liquidity. All right. Four, it needs to have liquidity above or below. The fifth one, it has to overlap inside of an imbalance, all right? Remember, price is designed to do two things: attack liquidity and rebalance and hold imbalance. So the fifth one is that it has to rebalance, it has to overlap inside of an imbalance, and then the fifth one is that it has to be tested at least once. So I'll just use this A-shaped clever writer to just talk about. I think we to talk about the last two, all right? Talking about your key level having liquidity above or below, you can tell that we want to buy from here now, all right? So this is our liquidity. This guy is our liquidity for that. That further validates why we should pay attention to this one. All right. So that is that as regards that one, and then this is also our liquidity right there. So now talking about your key level overlapping inside of an imbalance. So it means a lot of times whenever price violates your A level, whenever price for everything I'm talking about right now, don't worry. We are gonna talk about them. I'm gonna show you properly on the charts. All right. So a lot of times whenever your A level gets violated, right, so what is going to happen is that this guy is going to be a very is going to create for you some sort of big momentum, all right, in such a way that it ends up becoming an imbalance. All right, it ends up becoming an imbalance, and the next candle can even open whereby imbalance has to do with FVG. It has to do with three candles. All right, so the first one would look like this. This is the first one. The second one would look like this. All right, and the third one would look like this. So it means from this week low to this week high is our imbalance. So it means now this becomes our imbalance. So you want to pay attention to price coming into this imbalance right and then running off. So that means price has rebalanced this imbalance right now at a specific pricing level. So your specific pricing level could be that could be that you have a key level inside of it. All right, could be that you have. So now the specific price level now becomes this A level that is resting inside of this imbalance. All right. So in this case right here, so let us say you also price, further gave you some sort of reasons now to pay attention to selling opportunities by presenting for you this guy that we now understand to be a single candle liquidity. Right. So this is the candle low right here. This is the candle high. So right here, I want to pay attention to the fact that this one now becomes this one, and of course we should have a candle right there by the left side that gives us our weak eye. So it means we are going to have a key level around there that's going to give us our this thing. So from here it means what, from this week low right now to the candle high that's going to be around there. So now we have been able to establish the fact that this is an imbalance, all right. this A level now overlaps inside of this imbalance. Now we want to pay attention to price coming to rebalance this imbalance at this specific pricing level, this A level. So from when I want to pay attention to buying opportunities, right? So this is the first aspect, and then the second aspect is your key level being tested at least once. All right, so your key level being tested at least once. So your key level being tested at least once basically talks about say we have this guy right here. This is a V-shaped level, all right. Being tested simply means that key levels performing its primary function, its primary duty. V-shaped level should be used for buying opportunities, right? So price comes into the V level, buys from it a little bit, and then ends up, breaking beyond it. So it means right here we would have a big candle right here. All right. But then what can we pay attention? You can pay attention to the fact that this V level has been tested at least once. All right. It sponsors some bit of buys. All right. It sponsors some buys to the upside right there. So it means this has been tested. So this justifies where I feel like, oh, we might have some sort of complications. All right. So your key level being tested once simply means your key level sponsoring buys to its particular direction. It can also be your A level, it can be this one. So it basically means you're being tested, simply means you're bullish, your bearish open close key level. It's sponsoring some sales before violation, right? So that is just that. So let's go into the chart from here now, so we can just do things properly. Where is this momentum coming from? Just now, what's going on? Oh my God. That was interesting. All right, so we also need to pay attention to the fact that you can find key levels anywhere. All right, on any time frame. You can find key levels on any time frame. So firstly, so I think let's just start from the basic one. That is so I did not mention earlier you can find your V levels, all right, V levels and your A levels, you can identify them better on the lines charts. But for the open close key levels, you can only find them on the candles charts. All right, you can only find them on the candles charts. All right, so I believe I'm back now. All right, so let us just continue. Let us continue. All right, so I was saying V levels are best identified on the lines chart. All right, so it means somehow you probably need to make the lines chart your friend from now. And then your open close levels can only be found on the candles charts, right? So we said V levels are where we want to see price buy from. So price came into this V level, right, and we can see what price did. Price bought to an extent, right, before reversing. So this is a V level that price bought from before reversing. So I want us to just check a few examples. uh so so we said bullish open close key level should be used for buying opportunities. So this is a bullish open close key level, right? So we can see price came into this guy, and then we can see how price, bought, all right, price bought from there. And we can see that also paying further attention to this guy, adding context into it. You can see that this guy gave us a kind of breakout, but not a breakout structure. That is, we have this is a low to this is a breakout, all right, because these are breakout structure level. These are breakout structure level. So it means this guy right here is our breakout level. That is, it is within. It is within that this guy. All right. So right here we can now pay more attention to it. We can see that it has internal liquidity above it. All right. It has internal liquidity above it. So let us proceed further. We said bearish open close key levels are where we want to see price sell from, right? So this is a bearish open close key level. So paying further attention to this guy, we can see that price broke structure, right? Price broke structure, Secondly, this guy has internal liquidity. All right, this guy has internal liquidity. Um, so this is another V-shaped level right there. This is another V-shaped level right there. Should be used for buying opportunities right until proven otherwise. So price came to the V level, and we can see how it expanded. It expanded. Right. So we also said A levels are where we want to see price sell from. So what can we say? Right. Say this is an A-shaped level. All right. This is an A-shaped level. Price came to the V level, and it sold to an extent before price ended up violating it. So let me show a few more examples. Right, so this is an A-shaped key level right there. You can identify your key levels based on the line chart. That is your A level or V level on the line chart. So this is our A-shaped level right there. Price sold from it. And attaching more context into this guy, you can see that we broke structure number one. We broke structure number one. Secondly, it has internal liquidity below it. All right, it has internal liquidity below it. And thirdly, we can see that it took out internal liquidity. That is, it swept liquidity. All right, so that's just how we attach context. So now let us, take it a step higher. Let's take it a step higher right now. So we said our A levels are where we want to sell from until proven otherwise. So price prove this guy otherwise. Pay attention. This is an A-shaped level, all right. Price violated its price prove it otherwise. So right, so we can see that this guy came into the level. I mean, our first expectation, and you want to see price, buy from that level. All right, so we can see right here, and attaching context into this guy. Number one, we broke structure right here. We broke structure right here, number one. And secondly, we have internal liquidity resting above it. Right, you can see how we are trying to, attach context into everything right now. Internal liquidity resting above it. All right, so we can also see that this is a bearish open close key level. A bearish open close key level should be used for selling opportunities until proven otherwise. So now this guy got proven otherwise. What did price did? Price came back into the bearish open close key level. That is, this guy has violated it now. So it means you can pay attention to buying from that level. So let us attach a few context into this guy. So we can see that the only context this guy has is the fact that it swept liquidity. So this means at the end of the day, if your key level, if that key level has just one of those things we highlighted, I think I listed about six. There are times it's going to have just one. There are times it's going to have about four or even five sometimes. All right, so as long as just make sure it's not just a random key level for the sake of it. And you remember I mentioned something. I said there are times you are going to have a V level below, and sometimes price wouldn't come back. All right. Imagine price. I mean, at the end of the day, came back only for you to hit, only for you to hit loss, because this is your logical stop loss level. This is the invalidation level. All right. Imagine you didn't enter from here, and then you had this guy only for you to end up taking a loss right there. So that is just how you pay attention. That's how you attach context into everything you are doing. That's how you attach context into everything. All right, so right here as well, you can see it's looking so big now. All right, so right here we can see that we have an A level right here. All right, this guy should be used for selling opportunities, but then price violated it. And at the end of the day, look at this guy. Price, it sold to an extent that is, it has been tested. Remember I said price testing your key level basically means price using it to sell or to buy towards its intended original direction. All right, an A level should be used for selling opportunities until proven otherwise. All right, so price sold from that A level. Look at it. It is an A level. So price sold from that A level. It tested it, right, and then it broke it with momentum. All right, and at the end of the day, we can pay attention to the fact that this becomes our internal liquidity. All right, so now so we can also see the fact that the first thing is that we broke structure from here. The second thing is that it got tested. All right, being tested, this guy tested the key level. So it got tested, and the third one, it overlaps inside of an imbalance. All right, and I mentioned, I said price is going to rebalance and hold imbalance at a specific pricing level. I believe this is the first time I'm using rectangle tool with us. All right, so whenever you find your imbalance, all right, so it means our imbalance is just from is from this week now. It's from this week high to this week low. All right. So whenever you spot your imbalance, all right, you want to drag it to the left side. So dragging to the left side means you want to pay attention to the key level that overlaps inside of that imbalance. That is the specific pricing level where you want to see price rebalance that imbalance. So this is that specific pricing level. Look at it. This A level right is that specific pricing level. All right. So from here now, we want to pay attention to what. So now we said this guy broke structure. It got tested, number 2. It has internal liquidity resting above it, number 3. And again, we can see that it also swept liquidity. Can you see? We also swept liquidity from there. So it means we have about 4 right here. What did the price do? Price came back into that level right here, and you can see the massive expansion that happened afterwards. All right, you can see the expansion that happened afterwards. So also, we also have another information right here again. We also have another information. We can see that this is a bearish open close cliff that price violated. All right, so now let's attach context into this one. All right, so price disrespected this open close, number 1. The second thing is that it has internal liquidity, which is this one. Number 3, it overlaps inside of an imbalance. I said, FVG has to do with 3 candles. All right, so see what we have right here. This candle low to this candle high now becomes our imbalance. All right, so whenever you spot your imbalance like this, drag it to the left side. So dragging it to the left side means you want to pay attention to the key level that is inside of that imbalance, because that is a specific pricing level that price is going to use to rebalance this imbalance right now. All right, I don't know, perhaps some of us came from the background where we tend to believe that price needs to get into the 50% pricing level. I'm not against that, but then I just feel like this fact of a key level that overlaps inside of an imbalance has more logic. All right, you can see this is the key level that overlaps inside of this imbalance. All right, so it means if you were waiting for the 50%, it means you'll have to be waiting somewhere around there, and at the end of the day, price didn't come back there. Right, so so you can pay attention to the fact that this is the specific pricing level that is inside of this imbalance. So now price has to rebalance and hold the imbalance at a specific pricing level, which is this one right there. All right, so bearish open close got violated. It makes sense for us to pay attention to it for buying opportunities. All right, based on the context I just explained. So let us go further. Let's go further. All right, so this is okay. So I think I found a better one. All right, so this is a bearish open close key level right there. All right, bullish open close key level. All right, so we can see that right here, this open close key level got tested. That is, it sponsored some bit of buys. All right, it got tested one. Second one is I think this is the only thing I can say from this particular time frame. Right, so it got tested, so price came back into the open close clear. You can see the fact that price didn't come back here. So now the tip I'll be a hint I'll be or a clue I'll be giving us right now is that whenever you find a key level that has been tested, it means you can pay attention to it over the one that is after it, over other ones around it. All right, so it means this guy being tested is enough reason for me to pay attention to this level over this one right here. A key level that has been tested at least once, it holds value. I'll take that again. Whenever you find a key level that has been tested at least once, it holds value. All right, it holds value. So do not forget. So let's just go to another time frame, so we don't just trap ourselves inside that daily time frame. So let's do some more work. So right there, you'd realize we have several levels here. I don't know, this is H2. Let me just simplify it by going to the H4 time frame. So good. So on the H4 time frame, we have a V level right there. The price, like I said, disrespected to the downside. So it means you wanted to buy, price closed below. All right. So now you wanted to sell from the same level again. Price ended up closing above. All right. So from day night means we can pay attention. Oh, price didn't even come on this time frame. So I think let's just use that H2 the way it is. All right, let's just use that H2 the way it is. Let's go back to H2 time frame. This might just be the best key levels video I've even made so far. W's. All right, so this is a V level. All right, let's work with this one. This is a V-shaped level right there. All right, and see price disrespected it to the downside and disrespected it to the upside. So from here now, paying attention to why we should why we should use this one for that, we can see that we price broke structure from there. All right, and based on what we have been able to even understand from liquidity, we can see that we took out all of this liquidity right now. So all of these lows that got taken out means price just took out liquidity. All of this. So like I said, you mark out your key level, your liquidity better on the candles chart. That's you are paying attention to the wick of the candles. All right. So price took out this liquidity. Price broke structure. So you can see that we have enough reason now to pay attention to this one for buying opportunities. All right, so let us check out some more examples. All right, so this is another one. Another one. So we have this guy right there. Price comment no. So we have this one right there. So what can you pay attention to from this guy? This is a V-shaped level, all right? You can see it got tested 2 times. All right, got tested 1, 2. So now price violated it. So paying attention to why we can, just pay attention to why we can just use this guy, right? So we can tell that, oh, price broke structure, right around there, number one. You can regard this one as your internal liquidity, and you can as well regard this green candle as your internal liquidity. They both work, all right? So, and we know, of course, paying attention to the left side, you can see we're in a bearish environment now, all right? So right now it makes sense for us to just sell from this guy, all right? So yeah, so let us check out some more examples. So I just found one as well. So this is a bullish open close key level that got violated. All right, this is a bullish open that got violated. So what can we pay attention to? This is an open close key level that overlaps inside of an imbalance. Where is the imbalance? Look at this candle. This week, this candle low to this candle high is your imbalance. So price came to rebalance that imbalance at this specific pricing level. Right. At the end of the day, yes, we can say price sold from this one. But then we cannot as well disregard the fact that this is a violated open close. This is a violated bullish open close key level that price, sold from. All right, so we can see the fact that we broke structure. So we can regard even this one as internal liquidity right now. All right, so we can see price came back into that imbalance and just sold off Let me. So let's go into gold. Let's use gold. All right, so look at this guy. What time frame is this go? So this is XAU USD on the 30 minutes time frame. All right, so fair enough. All right, so right here we can see that this is a bullish open close key level. The price violated this guy right there. So what can you pay attention to? So we can see from that level price broke structure. We broke structure right here. All right, this is a higher low price. We broke structure right there. So from there it makes sense for us to just pay attention to selling from that guy. Let me switch time frame right now. I just want to prove to us that you can spot this on any time frame. You can pay attention to it on any time frame of your choice, any time frame whatsoever, any time frame, on any time frame. So let's switch to H2 time frame. So look at this for instance. All right, look at this for instance. Where the price come back to, I think this level right there. All right, so you can see this guy, this is an A-level that got validated, all right. But before price validated it, you can see that we tested that level. All right, we tested that level, price validated, and at the end of the day, this guy came into that level, and then we bought off. So let me just address what I mentioned as regard closing prices earlier. All right, so you'd realize we have a green candle right there, we have a red candle right there. So this green candle is our closing price. I think I'll just close on this note. This green candle is our closing price, while this one is an opening price. So for instance, let's say we want to mark this one right here. You'd realize this is not our key level. Why? Because it is blank on the lines chart. All right, it is blank on the lines chart. So this justifies why I mentioned key levels are closing prices. So it means even if you find a situation of whereby price has gaps, right? So you are paying attention to the closing price, not the opening price. You know, there are times price would open with gap. So we can I think price opened with gap on Sunday. Let me check where is Sunday. Oh, I think they registered these ones as candles actually. Right, so in a situation whereby you find gaps, I think actually has a lot of situations like that. So let me just try to look out. Okay, good. I think I found one. So in this case, right there, this is your key level. This one opened there and closed there right now. So it means this is your key level, and this is just an opening level. So this is not your key level. All right, so you are marking the closing price. All right. All right. So this is what we are marking out, not this one. So whenever you find gap and you're feeling like, oh, where do I now mark as the key level? Just pay attention to where the candle closed. So that is where you are gonna be marking out as your that's where you're gonna be marking out as your key level. All right. So you can spot key levels on any time frame. All right. You can spot your key levels on any time frame whatsoever. On any time frame whatsoever. Uh You can spot your clears on any time frame whatsoever. So I said that was going to be my last example, but let's just check this one for the last example right now. So this is USD card, USD CAD, USD card. All right, so pay attention to what we have right there. All right, all right, so let's use this one. Let me not stress you with that open close information. All right, so you see what we have right here. This is a V level, all right. Price disrespected it. So it makes sense for us to pay attention to this. And then we can pay attention to the fact that it got tested two times. Got tested, one, two. All right, it sponsored some sort of buys. Sponsored buys. So it means and price at the end of the day ended up violating it and even breaking structure. Right, price broke structure, number one. So why should we pay attention to this guy? Price broke structure, price tested it two times. And you can decide to use this open close as well. So it is still the same context that you use for this guy that you're also using for this guy. All right, got tested two times, price broke structure around it, and you can see this is even a snipe. All right, this happened to be a snipe. So that is it basically. It's very interesting as long as you are willing to pay attention, as long as you are willing to to follow simple instructions like I always say. All right, like I always say, as long as you are willing to pay attention. So look at this. All right, this is an A-shaped level. So so now attach context into this guy. So what can we see? This guy right here. So now it means this is an A level that got violated two times. So this guy might look far, but then I put it to you that it is still the same thing as whenever you have a situation like this. Whenever you have a situation like this, all right, it is still the same thing. The only thing is just that this one just looks like, oh, a lot of information has happened. All right. So the same regard you are giving this guy that looks closer is also the same regard you are giving this one. All right, this is an A level, goes validated how many times? To the upside number one, and then to the downside number two. Look at this one right there. This is also an A level. This is also an A level right there. That's that price validated to the upside number one and then to the downside number two. So you can see they are both the same thing right now. They are both the same thing. So see what we have right there. Right, this is an A level that sponsored some bit of sales. All right, price violated it. All right, see what this guy ended up doing. This guy came to that level and bought from it. All right, so it means it means for this case right now, this guy became its internal liquidity. All right, at the end of the day, price disrespected it again to the downside. So it means it makes sense for us to just pay attention to selling from that guy, selling from this guy right now. Why? Because you can tell that this is an A level that got disrespected twice. All right, that also got tested two times, one, two. All right, so price came there and ended up selling off. All right, off, ended up selling off. So all right, so this is also another beautiful example. You can see I'm showing as much as I want to stop already, but then I keep seeing them. I just feel like, well, let me just put it through. All right, so this is also a V-shaped level that got violated. All right, V-shaped level that we also buy from it, but then price ended up violating it. All right, price ended up violating it. It overlaps inside of an imbalance. Look at from this week low to this week high is our imbalance. So price will always rebalance and hold imbalance at a specific pricing level. Right. So the same importance we are giving this, you can also, just decide to use this open close right there. All right, so you can decide to use this one. At the end of the day, price also broke structure from it. And now I feel like, oh, this is only perfect pricing level that price came to rebalance this imbalance at. Like I said earlier, you can just to identify your imbalance better, you can just, spot it using your rectangle tool. All right, spot it using a rectangle tool and then drag your rectangle to the left side. So that is where you're going to spot the key level that the open close is going to be rebalanced at. All right, the specific pricing level. But look at this is an imbalance right there. To the left side, what can you see? This is a violated open close key level. All right, so this open close key level right there overlaps inside of this imbalance. Price came back into that imbalance, and at the end of the day, we sold off. All right, so I'll just draw the curtains right there. Oh, sorry, I just saw another one again. My bad. I'm so sorry right now. All right, so look at this is an A level right there. This is an A level right there. All right, so what can we pay attention to? This A level right there, you can see it sponsors some bit of sales. You can see price close below. This guy tapped that level and closed below. All right, price came there eventually. All right, price came there at the end of the day, and we violated the shape level. Now, your first expectation, we use it for sales. I mean, sorry, for buys. Now, all right, it has been proven otherwise, so we just use it for buys. So that's that. That's that about everything. Yeah. So yeah. So I think I'm done for now. I mean, sorry, I'm done with. I'm not done. No, I'm done with the examples precisely. I don't know if do we have anyone with questions before we call it a night. Like I said, this is like the best key levels explanation I've done ever. I promise you, the best ever. So do we have any more questions? So you know, the thing is, the more you get familiar, like I said in our last call, the more you get familiar, the more you understand. All right, because they say repetition is the law of deep and lasting understanding. All right, so when you repeat something, your mind and brain tend to get more familiar with it. All right, the more you repeat something, the more you get better at it. All right, so the mystery behind mastery is repetition. All right, so repetition is the mystery behind mastery. So it might look as though everything looks like, oh, you don't understand right now, but then try to go over it over and over, over and over. All right, try to go over it over and over, and you'd realize, oh, you just feel like it feels like you didn't hear something earlier. You did hear it, but then your mind, I mean, should I say your level of understanding didn't just grasp it at that point. So the more you repeat something, the more you get better at it. Repetition is the mother of learning. I promise you. All right. So do we just set limits when we identify them, or there's a confirmation? Don't worry now. We are still doing everything bit by bit right now. All right, we are still doing everything bit by bit right now. Then as regard the next question, are we supposed to mark all the key levels on the time frame? Don't worry, all right. We are still doing everything bit by bit right now. All right, we are not adding anything together yet. So this is key levels. Just treat it as key levels. Don't try to add entries to it yet. All right, just see it as, oh, whenever you spot your A level that gets violated, all right, for this purpose, whenever you spot your A level that got violated, you want to sell from it, just take it as that for now. All right. Whenever you spot your V level that got violated, all right, you want to continue selling from there. So just take it as that for now. Don't try to complicate it yet. All right. So when we get to entries or when we get to whatever, we are going to cross that bridge as well. So just, it's one step at a time. All right. It's one step at a time. I'm not trying to rush you. So don't also try to rush yourself. All right. In all fairness, don't try to rush yourself. You would realize I did not even talk about confirmation entry, whatever, because you have not gotten there. All right, before you pronounce Apple, you need to be able to identify alphabet A, identify alphabet P, identify alphabet L, identify alphabet E. So that is just the way life is, one step at a time. All right, it's one step at a time. So yeah, so this might just be all for now. All right, so this might just be all for now. So I'll see you guys when I see you. Oh my God. So yeah, so good night, everybody. I love you so much. Peace out.